The bears are out in full force. Grab your coffee, bear market that like and subscribe button, and let's talk about it. So after Bitcoin made a fresh all-time high back in October, it has pretty much been a one-sided trade, breaking down when Trump tweeted about the China trade war news. Now, back then, when that occurred, I really honestly believed that we would see this market get back most of the money that we lost during that Black Swan event. And it was very much a Black Swan event, seeing how on that day we liquidated over $10 billion. So basically, to get back up there, we needed to see that $10 billion come back into the market. And instead, what we did see was when price traded back up to the October open, it liquidated this little swing high right there and rolled over. 13 days ago today, I did put out a video on Saturday telling everybody that's in my community that since we did close back under the weekly 21 exponential moving average, you should have been looking to hedge off any downside risk at Friday's high. If you heeded that warning, that means essentially you took a short position, whether you bought puts or took a short on a futures perpetual swap contract at roughly $111,000. Now, obviously, we didn't catch the all-time high with a short, but why would we be shorting all-time highs? We are in a Fed cutting interest rates environment, and historically, that has been pretty bullish for most markets. In fact, it wasn't until this day when we got that China trade war news, when the Black Swan liquidations occurred, that we had any idea whatsoever that Bitcoin was experiencing some weakness. We did ultimately catch a short trade on that day, as that morning, when the markets opened for the New York session, we took a short trade on Pingu. We didn't catch the all-time high, but we did in fact catch a short equal to Bitcoin from 122K, and we caught all of that downside move. The next time I told you you should be looking to add or put on fresh short positions would have been right here at this price. So in a sense, we have not missed out on any of this downside move. So with that being said, what are we looking for? What are we anticipating moving forward? Well, we have been in extreme fear on the fear and greed index for quite some time now in the crypto markets. And although the risk markets, the S&P 500, experienced the same kind of downside move on that day, it ultimately did find a bottom and rally back up into fresh all-time highs. And if you see where we closed out on Friday's trade, we're just right under where that all started. So in reality, here in the major markets, we're not experiencing any kind of bear market collapse, any kind of terrible risk off, or anything that tells us we should be preparing for an upcoming doom. Now, there are some things out there that I do not like. For instance, I do not like the fact that gold has more than doubled since the bull market started in January of 2023. I don't like that the bond markets pretty much rejected last week's high, and instead of rolling over with the downside break and downside continuation, we're back up to fresh week highs and we closed up there. In a rate cutting environment, this should be a dead cat bounce. This should be a selling opportunity. And ultimately, for the bulls out there who do not think this is going to be the top, this still could ultimately end up being somewhere around the highs. Though since there's a big liquidation swing right there, not a monthly swing or anything like that, it's just a weekly double top swing, maybe we reject upon liquidating that price. If we continue with upside bullishness from this point moving forward, then obviously the overall dynamic is changing. Now, the Fed Watch tool is showing that there is less than a 50% chance that we get another rate cut in December. So that could be why the short trade did not work here this week on the US 30-year yield. Another thing that is kind of concerning me would be the ratios. For as you can see here, growth versus value has rolled over as well. So now what we need to see here is, do we put in a lower high and continue to fall, or does this ultimately in the future just become another buying opportunity? The S&P 500 yesterday experienced a significant bounce when it traded down to the quarter open. So yesterday when we bounced back up to the November VWAP on the S&P 500, I bought a 6100 strike put out over 150 days away. I will close that position if daily candles start closing back above that November VWAP in the future. When Bitcoin lost this high back in October, when we traded back up into October's open and we lost this area, I started to do a little bit of digging to find out exactly what was going on. I mean, if Bitcoin's down some 15%, risk markets should be down at least 5 to 7%, but we just did not see that. If we pull up the Bitcoin long-term hodler supply chart, we can see that literally your long-term hodlers have been selling since July. So after we liquidated the all-time high, put in a 3-drive topping formation on Bitcoin, that was all she wrote. And now it's heading lower, making fresh weekly lows. I went ahead and asked Grok if there's been any more massive sell side happening, and Grok came up with a very interesting answer. Yes, 2025 has seen significant stock sales by several prominent billionaires. Warren Buffett has pretty much went to an all-cash position, with net sales in 2025 alone exceeding $30 billion. He has a cash pile that is sitting at a record between $380 to $382 billion, and that is mostly in short-term T-bills yielding 4%. Jeff Bezos also selling this year to the tune of tens of billions of dollars worth of his own stock. Mark Zuckerberg also been selling. 2025 totals so far reaching $750 million, with smaller ongoing sales that's been happening throughout the rest of the year. Other notable moves: hedge fund billionaires trimming AI hype stocks, sales or exits from Palantir by funds like Renaissance Technology, Jim Simmons hedge fund, Bridgewater, Ray Dalio, Jamie Dimon, JP Morgan, also selling. So a lot of very prominent billionaires are absolutely taking profits in 2025. Do these billionaires know something that we do not? Most likely the answer to that question is a big resounding yes. Well, if you have not yet taken part in looking for shorts on your beloved Bitcoin, you could watch assets like IBIT or BITB, as both of these ETFs track Bitcoin's price. Now, obviously, the Fourier cycle model theory is out there, and we've been talking about it pretty much all year, so it's not like we didn't know about it. We just assumed that the new onset of all these ETFs could potentially stop that from happening, as there wasn't any real macro reason to look for shorts at all-time highs given just the Fourier cycle model. The reason why Bitcoin is selling off does not really matter. The question is this going to continue? By looking at the long-term hodler supply, I would say the answer to that question is probably another resounding yes. Until you start seeing long-term hodlers accumulate Bitcoin, you're probably going to see more sell-side activity coming in the future. Now, you've already experienced a pretty significant sell-off here, and then finally, another asset that I'm going to be focused on very heavily moving forward in the next weeks to months will be the Aussie yen, as the yen is considered to be a risk-off asset. Basically what we did, we traded down back to the year high. So right here is the year open on the Aussie yen, and that right there was the year high until we got into October and we breached that. So here we are 1 month later in November, and we've breached that again. This is not an outside candle. This would be a trending candle, as we did take out last week's high, but this could be some sort of bull trap, and only time will tell if that is correct or not. So a good price to watch moving forward for potential short side setups on the Aussie yen is going to be October's high at 101.212, and basically the only way we can play this moving forward is if we continue to reject that price like we did on Friday. We would want to put on shorts right there, looking for downside breaks, and if the bear market does in fact start, downside continuation. So with that, hopefully I covered everything that you need to know to position yourself for any upcoming market, regardless whether it goes up, down or sideways, hit that subscribe button. Make sure you hit the like button and follow me, and I'll keep you on the right side of the market to the best of my ability. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.